Hello and welcome to Bunnex Investment Group. In this video, we are going to talk about the top 2 entry confirmations that I use whenever entering trades. So you need to watch till the end to fully understand everything that we'll talk about. But before we jump into the whole video, be sure to check out our free Telegram channel using the link in the description below. So there are people who are coming in the comment section offering investments as well as account management. Please only use the links that are provided in the description box below if you want to engage with our services. So in this video, we are going to talk about what it takes to be a great trader, then the zone of market interest, the zone of market interest examples, whereby we'll actually give you 2 examples of where to have interest within the market. Then the entry confirmation 1, entry confirmation 2. So here is what it takes to be a great trader. Before we go into our today's topic, would like to just highlight something that would help someone. Of course, anyone around this world who is watching this video might need to hear this. So most people, for some reason, believe that all great traders were born like that, or this was a gift that they obtained naturally. Of course, I've come across several people who actually thought to be a great trader, you need to have a gift. But what people really think about is the time these people took in attaining proven systems, backtesting those systems, and then have demo trials. So honestly speaking, trading is the most easiest difficult job. So by easiest, it's actually something that you can actually delve into without much hindrance. You don't need any qualifications. You don't need a high amount of capital. You can just open an account provided you just have internet connection as well as a device. But the making it profitable part is actually the difficult part, where a lot of people actually fails. So if you are willing to change your results, be willing to change your approach. You cannot have the different results with the same approach. You actually know what's holding you back. Do you jump from system to system? 1. Do you over risk and over leverage your account? Do you have someone who is actually guiding you to be in a consistent line? So if you do not have a consistent approach, forget about having consistent results. So the first topic on our list today is actually the zone of market interest. So there is a popular saying or a popular trading proverb that says, what we see depends on what we look for. So the first thing that you should ask yourself is, what do I look for in the market? So right now, I'm sure you just have asked yourself, what do you actually look for whenever you open the charts? So if ever you do not have an answer, then you are lost. So the point you expect to get an entry is called the zone of market interest. So the zone of market interest is basically a point where you are now interested to get involved within the markets. So that is the point that we need to look for. You actually need to look for an entry confirmation for that second that you are going to press the trigger and open a trade. So here are the zone of market interest examples. So in our market makers context, we have several zones of market interest. However, for this particular video, I'm just going to mention the 2 common zones of market interest, which are the MOW on peak, that is basically on what we term the midweek reversal or after cycle completion, or MOW on Cefit, which is also called the ID50. So in those M's or W's, we have a point where we'll be now interested to take a trade, and that point is actually on the second leg of this particular pattern. So this is the point that is termed the zone of market interest. So on the zone of market interest, that is where you will now be interested to get involved in the market. However, the first question that will come in mind is, what do I need to see for me to actually trigger a trade? So that is basically what this video is all about. So before we talk about those first things that you need to see before you trigger a trade, we need to talk about this small concept, which is candle closures. So have you ever encountered a scenario whereby you enter on a green candlestick, but later that same candlestick closes as a deep red candle? So this is one of the major contribution to your losses. I'm sure if you have traded enough, probably for around 9 months and above, you would have encountered such a scenario whereby you see a candlestick pumping right up, but after triggering your trade, you'd see that candlestick shrinking and end up as a red candlestick. So in all the entry confirmations we will talk about, you must wait for candles to close, then decide to enter or not. So the first thing is actually to see the market coming to the zone of market interest. After coming to those market interest, you only enter after the candles close. So the first entry confirmation example or type is actually the one that uses EMAs. So after the market hits the zone of interest, the next thing is to get involved in the market. So the first type of entry confirmation uses EMAs or exponential moving averages. So in this entry confirmation, one will trigger a trade after a candle closes above or below is shown below. So the EMA or the exponential moving average in subject is the 13 EMA. That is the EMA that we call the entry confirmer. So in this case, we have the blue, yellow, white EMA, but the one that we use for entries, for entry confirmation, is the one in red, this one, and this is the 13 period EMA. So the first thing that we need to do is actually to have the market reach the zone of market interest. So in this case, we had this part, right? So this actually acted as the first leg, and after that first leg had completed, the next thing was now to see the market come back to that same zone of market interest. So after retesting the zone of market interest, we were now interested to get involved in the markets. So the first type of entry confirmation is to wait for a candle to close above, in this context, the 13 EMA. Therefore, this actually closed above the 13 EMA, and just the second it closes, that's the point where you actually trigger a trade, in this case a buy. Then the market went up. So here's the entry confirmation type number 2. After the market hits the zone of market of interest, the next thing is to observe price reaction within this zone. So this type of entry confirmation gives the most sniper type of an entry, since it uses candlestick reversal patterns. So there are a lot of candlestick reversal patterns, and any of those are valid to confirm a trade entry. So if ever you do not know these candlestick reversal patterns, we have a video on this channel that actually talks about this stuff. So this can be done as shown below. So in this case, we are still using the same pattern, but in this time we are now interested in using the candlestick reaction within the zone of market interest. In this case, we had this first leg, and from this first leg we actually drew this zone, and now we had to wait for the market to actually come back to that zone of market interest. And when it entered that zone of market interest, in this case we can see that there was a 3 candlestick reversal pattern, whereby we had a green one, a red one, and a red one. So in some instances we'll see a shooting star, a bearish engulfing pattern. There are a lot. So any one of that, if it occurs within this, you need to enter at candle closure after confirming the type of candlestick reversal pattern that has been issued. And if you do so, I am sure you'll see your trading results dramatically rise. So this is what I had for you today, and I would like to thank you for watching this video. Do not forget to check out our free Telegram channel. The link is right in the description box below. On that note, we come to the end of this video. Have a blessed day.